Hi, hello, hi everyone. Alright, thank you for watching another video with Stock Lighthouse Academy. Alright, so after the last video, I think some of you have been wondering, alright, so we learned about something new. So how do we actually find good companies to invest in? Alright, so in this video, right, I'm going to share with you some of the ways actually how do we filter through and find good companies to invest in. Alright, so before we get started, alright, okay, if you are on this channel but you haven't subscribed to it, please subscribe to our YouTube channel. Just click on the subscribe button on the top right, alright, or click on the bell button beside it actually to be notified of the more upcoming videos that will be posted along the way. Alright, okay, so a quick disclaimer, alright, anything that we mention on this video is just for education purposes. If you need to, please speak to your own consultant, own advisors, alright, to find out what is the best options for you to actually invest in the market. Alright, okay, so in this video, alright, we're going to touch on the fundamental analysis and the technical analysis. Basically, these are the two schools or thoughts of people that when they come to investing in the stock market. Alright, but this is going to be a very long topic, so I have actually broken it down into different videos. Alright, so this is going to be a 4-part learning series. Alright, and on each video I just touch on one topic by itself, right, so that you can actually learn better and faster along the way. Okay, so if you have not watched the previous video, alright, basically the video about how actually beginners can start investing, alright, just click on the link somewhere above or below on the comment, alright, it should reference you to that video and start watching that. So we're going to start on the fundamental analysis portion first, alright. So basically, what is fundamental analysis? It is actually a method of investing that is actually key and coined by a great investor called Warren Buffett. Alright, basically he actually looked into the fundamental of the business, how this company genuinely is doing as a business itself. Right? Remember, alright, in the previous video, if you have not watched it, I did mention when you're investing in the stock market, you are not just looking at numbers or rows of data. Alright, you are actually investing in real businesses. Alright, so it is very important to find out what is the business is actually doing. Alright, and by using this method called fundamental analysis, you are actually going in depth to find out how the company is performing. Of course, the depth of that level, it can go really deep, like how Warren Buffett is doing, and it had to be usually within your core competence or within your network of people that can actually provide you the kind of in-depth knowledge for you to actually find out a lot deeper. But in this video, alright, or rather in this series of video, well, I'm just going to share on the bit of fundamental analysis that is good enough for you as a beginner to use it, to understand, and to help you to kickstart your investing journey. Alright, as along the way, as you get more proficient and you find that fundamental analysis is a methodology that works perfectly for you and you want to delve more in depth into the different ways of actually using fundamental analysis at a deeper level, alright, you are feel free to actually dive into this area expertise and to find out how you actually can learn better more in your investing journey. Alright, okay, so for the first part of fundamental analysis, we're going to cover this portion called the economic mode. When I was investing in a business, alright, in a real business, alright, what are some of the questions that you will actually ask before you're investing in it? Alright, okay, so usually the first question I will ask myself is, does this company have an economic mode? Right, so what exactly is an economic mode? The economic mode is actually a term that was actually popularized by Warren Buffett. Right? He referred it as the reference of the business ability to maintain the competitive advantage over its competitor. Alright, in order to protect its long-term profit. Right? Okay, so basically to say that a company has to have something that is so unique that although there's competition, although there's market cycle, this company will be still able to sustain its profit earnings in the long run, right? So that is very important, right? So basically, when it comes to economic mode, generally speaking, there are actually 5 types. There could be more. It depends how you determine it because there's no really hard and fast rule about the terms of economic mode. Because I said economic mode is actually something that is popularized by Warren Buffett. So generally, different people have different types of it, but generally speaking, there's actually 5 types of it. Okay, and these are the 5 types: intangible assets, high switching costs, economy of scale, network effect, and rather strict regulations. Alright, so I will go more in depth to them one by one. Okay, so firstly, what is that intangible asset economic mode? Right, so a form of intangible asset could be a brand and a trademark. Right, it's not something tangible, it's intangible, you can't touch it, you can't really feel it, but you know by itself that thing alone actually costs you a lot of money. Alright, and one thing we can say is brand. For example, like McDonald's, Coca-Cola, Nike. Can you just imagine, okay, the owners of these three companies just walk up to you and one day tell you, hey, I have a company, I have this brand, I would like to sell it to you. Alright, okay, will you like to take it? And just ask, what company is it? For example, my company is called McDonald's. Will you like to buy over this brand? And you just ask, how much will it cost? Just think about it, it can easily cost you millions or even billions of dollars just to buy over this brand alone. But likewise, how about the other way? If you go to someone come to you and ask you, will you buy over my company, buy over my brand, I would like to sell it to you. Right? And you ask, what is this brand? No, it's just an ABC brand. And you ask how much it is. They tell you it costs you $500,000. You think about it. ABC brand you never heard before. You did a quick Google search, nothing comes out on the search result. You think like, what the hell? You want me to pay $500,000 for it? It doesn't make sense, you see. Yeah, so the brand itself sometimes have this value that is attached to it. That's why we know that some companies are very strong in that because you can't really beat them, right? So when it comes to fast food, the first thing, most of the time, what kind of companies or which other company you think of? I believe McDonald's will be one of them, will be at the top of the mind. Alright, so another type of intangible asset, it could be what we call patents and license. Alright, some of the key companies you look at will be companies that actually produce like microchips, produce drugs, hardware, or even machineries. Alright, so some of the brands you consider will be like Intel, right? Actually do microchips. They have patents on the chips that they make so that they protect themselves from competitors who fully copied it. Alright, if not, will be companies like Pfizer that actually create drugs. And every drugs that they do and invented are actually patent so that they protect their profit margin for the next 10 years from competitors or actually duplicate their drugs and mass sell in the market. Alright, so another good company will be like Apple. Alright, Apple also has some of their iPhone, their MacBooks and stuff like that patent in certain way in terms of designs or chips and layout and stuff like that. So that the competitors cannot fully copy and duplicate exactly the same. Although we know there are a lot of modification, a lot of duplication that looks similar, but there's nothing that actually comes close to be exact 100% duplicate copies of it. So there are certain patent involved and things like that to protect the companies in terms of their product and their earning revenue. Right? So that's its intangible assets. Right? The next one will be high switching costs. So what is high switching costs? Right? Basically, high switching costs is say that when the cost and value to switch over to another competitor is too high, the consumer generally will prefer to stay put. Alright? So this actually gives the company who have this mode an extra advantage in terms of bargaining power so that in the long run, if they want to increase their price, they are in control because they have the demand that is ready for their services. Alright? So some of the company will be like, let's say like Microsoft, right? We know that a lot of corporates are using Microsoft operating system, Microsoft Offices, alright? So if any competitors who want to come in and ask any company to actually switch it over, for example, switching over to iOS or switching to some other third-party operating system, right? It's going to be a lot of hassle, alright? So that's why a lot of companies will refuse to actually change because the cost involved of changing all the operating software is very high, and the cost of training, alright, their staff to get used to know how to operate the new operating system is a lot higher, and that will bring down their efficiency, in a way also directly produce less or lower quality customer service or product services to their client, and they might stand a risk to actually lose the clientele as well. So the cost is so high that most of the companies, they would not like to switch over so easy. So this company will have certain kind of high switching cost economy mode, right? Likewise, another two company will be SAP. They actually provide modules in terms of financing, accounting, modules to actually help companies to run their operation on the back end. Same thing for Cisco. They provide internet security services and network routing services. Right, so a lot of companies will not like to switch because they will not be able to actually have 1 or 2 days of their services to completely shut down so that they can switch over and do a system test, right? That might cost them a lot, especially in the current internet world when consumers would like to have all the products and services to be online running 24/7, right? So this company definitely has certain advantage in terms of this economy mode, right? Okay, the next economy mode will be the economy of scale. Right, so basically what it means the company actually has super low production cost. It mainly is because they are able to produce or purchase things in high volume that is very hard for their competitors to penetrate in. Right, so a very good example would be like Walmart or IKEA. So take Walmart for example. Let's say Walmart would like to sell, or actually just let's say sell a can of Coke in their supermarket. And we know that Walmart is super huge in US. They have so many thousands of stores. Alright, just imagine a competitor, if let's say we want to purchase a can of Coke, the cost price, for example, let's say is 50 cents, right? A can of Coke. That's the lowest they can go for any other mass market supermarket retailer. Imagine Walmart with that high volume, they want to flood all their supermarket with Coca-Cola. They can easily tell Coke that I want to purchase your Coke in this huge quantity. Are you able to give me a better price? For example, Coke willing to give you another 25 to even 50% discount, for example. They can easily get a can of Coke at maybe 30 cents or even 25 cents, right? So that alone itself will actually put Walmart on the advantage because they just need to, if they are able to purchase the Coke at let's say 25 or 30 cents and they sell at 50 cents a Coke in the market, they are easily able to outbid their competitors because they are still making a good 20% profit on per can of Coke, where their competitors who for example actually purchase a Coke at 50 cents per can will have to sell at break even or sometimes even sell at losses. Right? So that's the advantage of companies that have huge volume. They will definitely have an economy mode, and it's very hard for certain competitors to come in to actually compete unless they have similar or even larger volume, right? Okay, so the next economy mode will be the network effect. So basically what a network effect is just generally talking about companies who have a wide spread of users, right? A very good company to look at will be like Facebook. Alright, Facebook have a lot of users. Can you just imagine Facebook doesn't have users, it's just you and me, right? What's so great about Facebook then? It's just as good as just a normal SMS services. When I send something to you, you send something to me. It's not interesting at all. But Facebook have grown over to 1 billion over users over so many years, right? It have created a network effect that is so useful and so powerful that people who are on their social media platform would like to know more stuff about one another, and that's where they actually have an advantage to leverage on their data user base. And that's where over the years we've seen that they actually step in, that evolve from just a typical social media platform to share about daily life of people. When they first started, they actually evolved to become a marketing agencies that actually they do a lot of paid advertisement online to actually promote products and services on social media, right? Of course, it's not just Facebook alone. Under Facebook company itself, they have they have actually acquired 3 other different companies, which is mainly WhatsApp, Messengers, and also Instagram. They are under their arms, right? So beside Facebook and its subsidiaries company, the next one actually you can look at actually Google. Google is actually a very big search engine. They mainly tap on the number of users Google base we have. So one of the key things they have under them is also like YouTube, if not your Gmail, right? There are a wide spread of users has been using their services. Right? It's not just in US, in China itself we have Alibaba Group, right? And one of the platforms they have a look at is actually the Taobao.com, actually an e-commerce platform there where they have retailers actually be in their network to promote their products and services, actually to sell online. And on the other hand, they actually have a lot of database of users who are actually consumers who actually are buying across from all these retailers itself. So they create a community or network of buyers and sellers, right, to actually cross sell and do transactions within this platform, right? So it's a very huge network effect. So any companies who want to come in and take over them, unless they have something that is a lot more promising, a lot more advantage in terms of this current platform, it's usually a bit harder for consumer to actually switch out of their platform and actually change it to another network. Right, so their network effect is very, very strong, very, very powerful. Right, and the last but not least, all right, is this economy called the strict regulation. Okay, what do I mean by that? It's just that some companies actually they have been serving in a very market limited areas in terms of the size itself. Okay, so just to give you a good example would be some company they are actually geographically monopolized. Okay, a very good example would be airports. For example, like Sydney Airport, companies that are listed because in the country itself or in the city itself, generally you will not have, you have about one, or maybe if your city is big now, you probably have about 2 or 3 other smaller nearby airport that actually have to support it, but usually the main one. So you hardly will see 2 big airports side by side that is run by 2 different companies. Yeah, so these kind of companies are usually have what we call an economy mode by itself because they monopolize certain area, and as well for airport, is highly regulated. No countries in the world will actually give permissions or give regulation approval to actually run 2 different airports concurrently. Besides the geographic monopolization of certain companies, the other one you can actually look at it where certain companies have very specific niche that is so limited that it's not easy for other companies to come in. They have a very high barrier of entry. Okay, for example, niche market like the Boeing or Airbus, they are the company actually create aircraft. Right, so it's also a very high regulated industry because of the safety reason and things like that. It's not easily anybody can come in and create their own aircraft. Right, so they are the main 2 dominant players in the market in terms of aircraft creation. Right, so this could be one of them. The other company will be the LMT. Basically, they are a defense company. They actually provide weapons to the US or maybe even to other militaries around the world. Right, so they are actually one of the top dominant defense company in the United States. Right, so it is highly regulated because selling weapons is highly controlled. So they are the few companies that have already given approval. Right, so it's very hard for any companies to come in to say that no, I want to be the next one to actually sell you a weapon. Right, I want to overtake this competitor. It's really very hard because on the regulation point of view, on the country point of view, on the politics point of view, it's very hard to get approval to pass through and be one of the top countries or main supplier actually to provide weapons to the military itself. Alright. Okay, so another good company to actually look at will be like the CBOE, Chicago Board Option Exchange. Alright, this is just one example, or rather, I would say most of the exchanges have this unique mode. Yeah, because exchanges are very small and limited around the world. Okay, so for every country or every cities, they generally have just 1 or 2 exchanges, and most of the exchanges does not directly compete with one another. They usually have its own certain niche by itself. Right, so for any country, usually in itself, they usually also will not give too many licenses to exchanges to operate because that will create a lot of conflict of interest. Okay, if the competition get too high, it get very confusing. It actually defer away company who actually want to list their company within the country exchanges, and that will not be helping the economy to grow and boom as well. And that's why generally when it comes to exchanges, the authority usually will not be so easily to give approval for any companies to step in. So once you have that license, it usually creates a very high barrier of entry for the next competitor to come in. Right, so now we know about the 5 different economic mode. Right, sometimes we ask ourselves, so it's like, can a company be only one mode, or can a company have multiple economy mode? Right, the answer definitely is yes. Right, some company only have a single mode, for example like Nike, Intel. Alright, they are basically running on their brand or running on their patent. They also only have like intangible assets as their mode. If not, some company actually have multiple modes like Facebook or Microsoft. Alright, for example, like for Facebook, you have network effect. At the same time, you also have intangible assets because of Facebook brand itself. Alright, so these are some of the companies actually have multiple modes. Of course, a company who have more modes, it just means that the company is a lot stronger in terms of competition, right? So it also doesn't mean that a company have a single mode is weak. Alright, it's always better to have a mode than no mode itself. Like some companies generally have no moat, right? So it's always better to have some form of moat and than no moat by itself. Alright, so just a quick summary. So these are the 5 types of economy mode: intangible asset, high switching cost, economy of scale, network effect, and strict regulation. Alright, okay, with that, so this is the end of this part 1 of the 4-part series. Alright, so likewise, if you like this video, comment below on this video or any part of this section, alright, to tell me how do you find this video. Is there anything that you would like to add on to share with the community or the viewers of this video, so that we all can learn from one another? And likewise, is there anything else you would like to find out, so that I can know what interests you, what are some of the topics you would like to do, I can add on to the video series itself. Alright, if you have not liked it, please subscribe. Alright, click somewhere in the button above or below this video, alright, to subscribe to our channel. You can subscribe to our Facebook page as well to be updated of the next video series when it's ready to be posted. Alright, okay, with that, alright, have a great day, and I will see you in the next video series. Bye.